Uh, 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 uh. Uh, hmm. All right. What's up? What's up? Hi, Felicia the Goat and Charles. How are you guys? Mm. Yep. Will Fed rake the hide? I don't know. We'll see. How are you? The fourth wall, Rami. Engine. Hey, Kurt, how are you? Trading news? No, I don't think so. I did have this gold long that I didn't get triggered on by the spread. This fucking sucks. Spot on gold long also. I don't know if you guys got triggered. And I don't know if I am going to. Yeah, I'll keep it because my risk is very low. So yeah, and that euro yen was a fantastic trade, very fast, very fast. Your euro yen didn't get triggered? Oh, that sucks, mate. Mine did. Hello, how are you? How's everybody doing? Yeah, my gold didn't get triggered, but my euro yen did. Here is the trade history. I got triggered here, took 75% off here, and then took the rest here right at the lows. So that means that a 50 piper? Yeah, I made a 50 piper. Right. Yeah, so I'm up 4.1% on this account, on this challenge account. Now let me see. I am going to um what's the name of this fucking thing? Hold on. It's called uh, Live Squawk. Live Squawk. Haven't logged in this for a while now. Log in. All right, so I am going to use the Squawk for this. Um,
Player refreshed.
Player refresh. So here's what we're going to do. Um, this is my Squawk. We are going to
10 minutes now until the top when we get the FOMC rate decision. Preview from City. They, along with everyone else, expecting 25 basis points, but they go on to say the language on ending the hiking cycle is also unlikely, especially with upside risks remaining to the medium-term inflation outlook. However, with downside risks on the near-term inflation outlook, we may hear an uptick of a dovish sentiment during and after the July FOMC. Dovish revisions may emerge in the July statement, with their economists expecting language like inflation remains elevated and holding policy rates unchanged allows for additional information to accumulate, to be removed, or revised dovish. They go on to mention that the conference following half an hour afterwards, saying it's more of a mixed bag. It will be dovish if Powell more strongly guides away from a rate hike in September or de-emphasizes dots that implied one further 25 basis point hike. It will be hawkish if Powell emphasizes the resilience of activity and approaches the topic of a potentially higher neutral rate or real interest rate.
That's right. Right, so we're going to have that squawk on for the news. All right. That's a squawk, mate. That's a squawk. All right, so I'm gonna keep this gold. No, I'm going to delete it. This it's stupid to to think that I'm not gonna get stuck out on such a tight stop loss. Hold on. Yeah, I'm deleting that gold. It's a shame because it was a good trade. Um, announcement. All right, so let's. I don't think I'm gonna trade the news, mate. Maybe I will get on a trade. After the news. All right. So deleted that. Let's see what we have on the S&P 500. I told you that it was going to be very, very annoying to trade the news. To trade this day, well, because of the FOMC day. Um, uh-huh. And the Nasdaq. Oh, look at the Nasdaq. So, what to do here? Let's see what what we have here. Calendar events. So it's expected that the Fed is going to rise rates again by 25 points. So this is going to be very bullish um, for U.S. equities. If the Fed rises rate, it's going to be bullish for U.S. equities. No, I don't have any pending orders, mate. Now, if we hear also what's going to be interesting to see is going to be the hold on Fed the hold on, let me take that sip of coffee. Oh yeah, the press conference afterwards, because if we see some hints of dovishness, I mean, you have all heard the squawk, right? The squawk guy. All right.
5 minutes now until the top. One more preview from Oxford Economics. They say a hike this week is fully
All right,
priced in,
everybody. I
with
am
no update to
live
the SEP,
for
with the
the
focus on Fed Chair Powell's
FOMC
post-meeting presser. Odds are that
rate
Powell will
decision.
signal
So
additional
come
rate
join me
hikes are
now
not off the
on
table, but the
YouTube.
Fed will take a more cautious approach, conveying it will skip a hike in September.
All right. All right. We are done in 5 minutes. Copy. All right, everybody. I am live for the FOMC Your goal got triggered and you pull 75% at 75 pips. That's amazing, mate. That was another sniper entry, right? That's what I do. I snipe my fucking entries. So, today was a good day for the VIPs on that Euro Yen. On that Euro Yen. All right, so expecting a move higher on U.S. equities, move lower on the U.S. dollar because of the dollar bill, yo. So very possibly we'll be looking for shorts on the USD. Um, Here's that good ass shorting level.
Just less than 3 minutes now until the top when we get the FOMC rate decision.
So, yeah, I'm going to look at some possible longs on the Euro USD here. Oh yes, this looks amazing. This looks amazing. Yeah, you're the best for sure, making me bank daily. Amazing, mate, amazing. That's what we do. So you made more money than me today. Okay, so Euro USD will be. Euro USD will be. Yeah, around this level is fine. So let me see. 92 pips. I'll take a very easy one. Yeah, I'm ready. I am fucking ready. Where's my squawk? Here it is. One minute. I will only take this trade if we get that rate hike.
1 minute now until the FOMC.
One minute. All right. 20, 10 seconds, no, 20 seconds. Hola, ¿cómo estás?
10 seconds.
10 seconds, guys, 10 seconds until the mambo.
Hike 25 as expected, hiking 25 as expected. FOMC will continue to address additional information.
I fucked up.
So that's the FOMC continuing to assess additional information and to consider extent of additional firming to curb inflation.
I'm going to tell you why I didn't take
They say the vote was unanimous and repeats that they will take cumulative tightening lags into account.
Yeah, this is a challenge account, and I forgot
Economic activity
that,
expanding
every
at
single
a
trade
moderate
needs
pace,
to have
inflation
a stop
elevated
loss level.
and highly attentive
So,
to inflation risks.
Yeah, I
Repeats
couldn't
that
take
tighter
but,
credit likely to
it
weigh on
was a
activity.
good decision.
And to continue the same pace of reducing Treasury and MBS holdings.
See, I mean, I told you that a rate hike would be very bearish for
So just to repeat some key comments there, after the
Have
as
a look
expected
at,
25
US
basis point
equities.
hike, The Fed is to consider the extent of additional firming to curb
Yeah,
inflation
man, that
and will
sucks.
continue
I
to
mean,
assess
that was a
additional
good idea,
information.
trade idea. Now look at this, DXY completely and utterly, yeah, right to my level. I mean, everything was spot on my trade idea. But you know what? I would have made how much? Woulda, coulda, shoulda,
Along with
right?
the Fed, the CBO
20
revises
pips
US
on that news,
2023
which
growth
is
forecast
okay.
higher amid a strong first half labour market. They revised the US GDP growth to spot 9% from the spot 1% forecast in February
It's
due to
fine.
the labour market strength. They now predict this year's average US unemployment rate at 3.7% versus 4.7% in the February forecast. Second half GDP growth to slow to spot 4% after 1.4% in the second quarter. They cut next year's US growth forecast to 1.5 from 2.5% in February and projects this year's core PC inflation at 4.1% versus the 3.4% in February. US interest rate futures put chance of Fed hike at 18% in September and 36.5% in November following the statement.
Puta. We're going to continue getting hikes out of yep. Oh, you know what? I fucked up here too. I mean, I didn't fucked up, but I didn't see this entry, this possible entry here in gold. But you know what? I wasn't going to trade gold. Let's do it in hindsight, right? So in hindsight, there we go. Power buy zone to the tick. So in hindsight, this was a good trade idea. Stop loss below the structure low, which was this. That would have yield for me a nice one. At least a 2R.
For context, on the US interest rate futures, probability of a Fed hike was 18.9% in September and 37.3% in November before the statement. So little change.
I wouldn't hold shorts here on US equities. What I'm going to do, I am going to buy into some weakness on the S&P 500. Now, remember, this is a very aggressive. I am not going to send a signal on this, but last interest rate decision, the real move happened at.
Looking to the statement compared to June.
The real move happened when Powell, made his. I'm sorry. At the press conference. I'm sorry. I'm a little spaced out. So I'm gonna take on a long on the S&P 500 with very minimum risk. I'm gonna risk about 0.15%. I am not sending a signal on this one, mates. This is purely for my live traders. And I'm gonna stick here for a while. I'm gonna go at market, but I need to calculate my risk. Yep, I'm gonna calculate my risk here. So it's how much? How many? It's about 1,200, 125 pips. So I'm gonna calculate my risk before because I don't remember. So 100. I'm gonna calculate my risk like this. So let's see. Uh, 45, 45, 48, 48, and I am going to go on 45, 45, 35, 45, 48. Uh-huh. So 35 lots is what? 45 bucks. So I'm gonna do one full lot of this. I'm gonna do one full lot on the S&P 500 with stop losses at 45.50. 45.50. I'm gonna buy at market here. Yeah. What? Shit. All right. One full lot, I said. 45.50. Right. And that, yeah. So basically, I'm risking 0.15% on this trade. Yeah. Let's wait and see what happens. This can be very good. It depends on how how hawkish, and not so dovish that press conference is. I am going to delete this trade because I was a little bit over risking. 45, 49. Nope. 9. Right. So now I'm good. Now I'm good with the risk, risking 0.13% on this trade. I'm in. And yeah, let's wait for that press conference. We're going to stay here. No need to go anywhere. Uh-huh. All right, let's go to YouTube then. And let's wait for that press conference. Any questions in the meantime? Federal Reserve. Live. So the Federal Reserve is in the press conference is in about 20 minutes. So we're going to wait. Yeah, this is S&P 500 looking good. And the Euro USD was a great trade too, but sadly I couldn't take it because this is a challenge account, and all of the trades have to be placed with a stop loss. So I didn't have. I mean, I was waiting for the, for the release, for the release of the decision, and I forgot to place my stop loss here because I was going to buy at market. And when I came to the chart to look at the level, price had already started to rally, so I missed it, sadly. Yeah, but it was a spot on, analysis. There's no levels for the Nasdaq, mate. So I don't think I'm going to stick around until the, you know, or maybe I will. See, there you go. We're starting to see some spikes up, but everything is going to come down to the interest rate decision. No, the press conference, right? When was the last? I don't know. I don't want to do that. Maybe I will, maybe I won't. I don't know. Hold on. Oh yeah. Uh, Ron, how are you, mate? God damn it, it's been a while. What the fuck have you been? How's your sniper trading going? You think gold and Euro USD good chance to continue long? I don't know. I mean, it depends, right? It depends on the press conference, right? This long that I got in on the S&P 500 is highly speculative in the sense that I am expecting that the press conference comes along the lines of the data that we just heard, which was a rate hike, and we have high probabilities of rate hikes in the future. So if Powell fucks me with some hawkish comments, I'm going to get stopped out. And the US dollar is going, not hawkish, but dovish comments, I'm going to get stopped out and the US dollar is going to rally. But most likely, we are going to hear some hawkish notes still in his speech, right? Which is going to make for further downside on the USD, which will be very bullish for the Euro USD and gold, if you understand what I mean. QNT USD went in loss. Well, mate, I assume that you're talking about um, that you are talking about the that you're talking about the um, what is it? The crypto signals. But let me show you how good Aziz is at trading. This is the results of the crypto signals. Just look at the win ratio. You are going to have some losses when it comes to trading, mate. If you can handle losses, you shouldn't be trading at all. Being quite busy with work, mate. Don't have time to trade. Need to be totally focused when I trade. Otherwise, I only lose money. So don't trade at the moment. I agree with you. I agree with you. What's your opinion on volume profile? Can you use it? Yeah, I used to use it. Let's have a look at this. I mean, it's not a bad tool. You just need to understand how to use it, right? So let's go here. I have it here, fixed range. I don't know why it's not working. All right. Oh shit! I know why it's not working. Um, I don't know why it's not working. Does this doesn't have a volume? I don't know. Uh, right, this has volume. So there you go. This is the volume profile. Wow. Why don't we have a good look at the volume profile? You know what? Euro yen. We are going to look at the volume profile on the euro yen at the time I took that trade. Price was trading at this level. So if you notice, I took my entry right at the point of control. So yeah, it might work, mate, to get some good entries. I don't know. It needs to be back tested, of course. Gold. This gold doesn't have a volume, which is weird. It needs to be back tested, but yeah, for sure. I mean, it works if you can use it. So why don't we go to the Euro USD? Uh-huh. And let's go to do that. Maybe just at this level. No. You see, I mean, I haven't back tested it, but I'm going to show you what this means. So this is the volume profile. For everybody not that doesn't know what the volume profile is. This histogram is the volume profile. It's very different from the volume you get at the bottom of your charts because the volume you get at the bottom of your charts gives you the volume, per candle. That means that it gives you the volume, in this case, every 3 minutes. This histogram gives you the volume per trading level, right? Which is which is most important, more important, right? So this green line is called the point of control, which is the point of control is the level with the highest volume on on the history, price action history that the indicator is analyzing, right? And you know, you get buying volume, selling volume. Here, the buying volume was higher, etc. I don't. I used to use it, but not for pinpointing entries at all. It's not a bad indicator. It just needs to be. You just need to tweak it. US 30 hit the stop loss in your signal today. Just know that was not my signal. You know what? You need to be careful if you want to follow my trades and my trades only. You need to be careful, right? Here, this US 30 signal is from Olympio. My signals, you need to, I mean, that's why we have this. My signals say Orlando. And my signals, are very, very, very differently worded than Olympus. If you want to follow my signals only, just be careful. That was not my fucking signal, and I don't trade Olympus signals. What?
Just more than 10 minutes now until the bottom
Hey,
of the hour when we
Godspeed
get the
Freeman, how are
FOMC presser
you?
with Fed Chair Powell.
Thanks for the answer, motivating. Yeah, go ahead, man. Aziz is very good at what he does. I mean, the crypto channel is making money. That's for sure. I myself, I'm going to start trading those signals too, because just have a look at what he's doing. I mean, the win ratio on his signals is just amazing, right? It's much higher. And here is my win ratio. It's very good too, right? So we're printing money, both of us. And I said, what about? So, Vegas, 11:20 en la casa. Oh yeah, 11:20 en la casa. Well, here it's 12:20 en la fucking casa. Crypto about to go on fire. Yeah, but I lost. I built a very big fucking bullish position in Bitcoin, and I got stopped out. I lost 1.5%. Let me show you what I did. I mean, here, maybe on the hourly chart, much better. This was not a signal on the crypto group. This was my personal trading. So I got triggered here long. I put some buy stops here. Ooh. I put some buy stops here, got triggered here long. My stop losses were all the way below here, below these lows. My initial risk was not very high because I was expecting some pullbacks. So I bought this dip and this dip, right? And then I am, when I saw this spike, I was up about 0.3%, which closing there was stupid, right? And then I got stopped out. I don't trade. I was trying to build a big position, not a big position, a long-term position, long in crypto. But yeah, I got stopped out. Um, in hindsight, my risk was too high on the deep buys. Shouldn't have deep bought, but that was the plan from the start, right? Yeah, so I'm not looking at crypto right now. All right. So we are 7 minutes away from the start of that press conference, so heads up to that. It's going to get a little bit volatile. I have the press conference here, so we're going to listen to what he has to say, right? Whilst looking at the charts, of course. All right, I'm going to place it here. Can you share me the crypto spreadsheet URL? No. No, I cannot share you that spreadsheet. And yeah, also you need to be invited to it. Should have waited for the 3050 to break and create support. I just want to follow only your trade. Thanks from now on. All right. Phase one was rocky. Which one? Which phase one? Are you trading the phase? Are you trading a challenge? I don't understand, mate. Godspeed, Freeman. What the hell are you talking about? What the fuck is you talking about? All right, 5 minutes until Powell starts breaking this fucking market. I mean, I really have a super allergy right now. Desde la 1 de la mañana, cabrón. Desde la 1 de la mañana. Uh-uh. Um, 5 minutes. How many stop losses today? You almost blow my account in VIP group. What the hell are you talking about? Mohammed, you should cancel your fucking subscription. You are not a trader. What the fuck are you talking about? Ah, BTC, bull trend, coming out of the lows. All right. You are a fucking good man. Thank you. Desde la uno, no sleep. Yes. Imagínate. Imagínate, cabrón. So, Ilan Mohammed, you are the clear example of people fucking up, trying to double their account, risking 20% of your account per trade. How the fuck are you still trading? It's beyond me. I didn't have any stop loss today. Yesterday I had 2 winners and 1 stop loss. On Monday I had 3 winners. So I don't know what the fuck are you talking about. But if you're unhappy with my trading, you should fuck off my VIP group, right? I don't need you or your 40 pounds per month. If you're unhappy, just fuck off. You're only trying to focus. Yeah, over leveraging, of course. I'm trying to focus on US 100 for a few months. Oh, yeah? Well, that's a good thing. I only focus on 2 markets, the US dollar and the Japanese yen. I know them, I know their personalities. And yeah, you should focus and just become, you know, a printing money machine on 1, 2 markets, and that's it. Say my name. No. All right. Almost starting up. Let's see what Powell has to say about this. Signals is not enough. Risk management is so important. Of course it is, and of course it is. And I know he doesn't manage his trades like I do. He lets them run, so eventually they hit stop loss. He doesn't take profits. I mean, people are just stupid, right? One last thing: the signals in the crypto group are all yours. No. There's one trader that manages the crypto signal. His name is Aziz, and he's very good. He only does he only does crypto all day, every day, and he sends the signals on the crypto group by himself. All right, Powell's about to start. No, I'm not gonna say your name. I'm pretty sure that it means some kind of a nasty shit in Russian or something like that. All right. This is about to start. Here we go. Powell has yet to enter the fucking room, but there you go.
Chair Powell starts the press conference.
Here we go. The big man is entering the room.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. Today, we took another step by raising our policy interest rate a quarter percentage point, and we are continuing to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our looking ahead, we will continue to take a data-dependent approach in determining the extent of additional policy
Growth in
firming that may
consumer
be
spending
appropriate.
has slowed from earlier in the year.
I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a moderate pace. Growth in consumer spending appears to have slowed from earlier in the year. Although activity in the housing sector has picked up somewhat, it remains well below levels of a year ago, largely reflecting higher mortgage rates. And higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor
Uresh. Kavishanka.
jobs per month, a pace below that seen earlier in the year, but still a strong pace. The unemployment rate remains low at 3.6%. There are some continuing signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has narrowed, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in May, total PCE prices rose 3.8%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In June, the 12-month change in the Consumer Price Index, or CPI, came in at 3.0%, and the change in the core CPI was 4.8%. Inflation has moderated somewhat since the middle of last year. Nonetheless, the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher cost of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning to inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 5.25% to 5.5%. We are also continuing the process of significantly reducing our securities holdings. With today's action, we've raised our policy rate by 5.25 percentage points since early last year. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of our ongoing monetary restraint to be realized, especially on inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will continue to make our decisions meeting by meeting, based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back to our 2% goal and to keeping longer-term inflation expectations well anchored.
Yeah.
Reducing inflation is likely to require a period of below-trend growth
There you
and
go.
some softening of labor market
Right.
conditions.
That the key is
Restoring
the-
price stability is essential to set the stage
you
for
know,
achieving
press
maximum
conference.
employment and stable prices over the longer run.
While the
To
SEC
conclude,
goes
we
after
understand
the
that our actions
exactly.
affect communities, families, and businesses across the country. Everything we do is in service to our public mission.
Yeah, right.
We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All right, go ahead. So this,
Mr. Chairman, thank you.
Very unbalanced.
You have, I think, a couple times in your opening remarks, talked about this language in determining the extent of additional policy firming that may be appropriate. Should we take that to mean that additional hikes are likely on the
There you
way?
go. Here we go.
And should we also believe that all future meetings, say September and November, are live, or are you in a every other meeting mode? Thank you.
So we haven't made a decision to go to every other meeting. It's not something we've looked at. We're going to be going meeting by meeting, and as we go into each meeting, we're going to be asking ourselves the same question. So we haven't made any decisions about any future meetings, including the pace at which we'd consider hiking. But we're going to be assessing the need for
They are
further
going to
tightening that may be
hike.
appropriate. You read the language, to return inflation to 2% over time.
Yep. This is very
I would say that the
There you
intermeeting
go.
data came in broadly in line with expectations. Economic activity remained resilient. Job creation remained strong while cooling a bit. And the June CPI report actually came in a bit better than expectations for a change. And the June CPI report, of course, was welcome, but it's only one report, 1 month's data. We hope that inflation will follow a lower path it will be consistent with the CPI reading, but we don't know that, and we're just going to need to see more data. So what are we going to be looking at? Really, it will be the whole broader picture, and starting with we're looking for moderate growth, right? We're looking for supply and demand through the economy coming into better balance, including in particular in the labor market. We'll be looking at inflation. We'll be asking ourselves, does this whole collection of data, do we assess it as suggesting that we need to raise rates further? And if we make that
We
conclusion,
good,
then
man.
we will
We good.
go ahead and raise rates. So that's how we're thinking about the next meeting, and how we're thinking about meetings going forward potentially. But we're now
I
mainly
don't think
thinking
so.
about the
Let's
next
have a look
meeting.
at
I will also say, since we're talking
How
about it,
it reacts to the-
between now and the September meeting, we get 2 more job reports, 2 more
yeah, we
CPI
see some
reports. I think we have an ECI report coming later this week, which is Employment Compensation Index, and lots of data on economic activity.
not
All
a
of that
big
information is going to inform our decision as we go into that meeting. I would say it is certainly possible that we would raise funds again at the September meeting if the data
There
warranted.
you go.
And I would also say it's possible that we would choose to hold steady at that meeting. We're going to be making careful assessments, as I said, meeting by meeting. And I'll close by saying we've raised the federal funds rate now by 525 basis points since March 2022. Monetary policy, we believe, is restrictive and is putting downward pressure on economic activity and inflation.
If I could just briefly follow up on something
All
you
right,
said
so,
there.
we
You
took
said the
the
data in the
nice
intermediate
bond on the
period,
S&P 500.
it broadly came in line with expectations. Does that mean there's unlikely to have been a change in the overwhelming outlook of the committee that 2 more hikes are necessary?
I'm just going to go back to what I said. That's the question. We have 8 weeks now until the September meeting, and all that data that I recited, we're going to be looking at all of that and making that assessment then. And it really, we did have the one good reading, and of course we welcome that, but it's just one reading, as everybody knows.
I'm gonna move
And
myself
we've
up
seen
here to break
we've seen
even.
this before in the
Don't
data.
need to risk
Many
anymore.
forecasts call for rates for inflation to remain low, but we just don't know that until we see the data. So we'll be focusing on that.
Gina.
Gold should be breaking with the highs. Yep.
Thank you. Thanks for taking our questions, Chair Powell. Obviously, you upgraded the language around growth in the statement today. We've seen
there you go.
the Barbie movie numbers. We've seen everyone going to Taylor Swift
I am going
concerts
to
this summer.
take,
It seems like the American consumer is in pretty
I
good
was
shape.
risking, I don't
And
remember
it does
how
seem
much I
like
was
growth is sort of picking back up a little bit, or at least doing
$475,
well.
so I'm good
And I
still.
wonder from your perspective, if that continues, if we see growth not just stabilizing, but doing,
Why?
performing well this summer, is that a problem because it's inflationary, or is it good news because it suggests that a soft landing is more likely? Just how are you thinking about that sort of trajectory?
How about now? Can you hear me? Oh shit, I forgot to. Hold on, give me a fucking second. Yep, boop, 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 boop. Um, so I'm going to take off 75% of my S&P 500 here for 1R. 0.75% here for 1R. Boom. There you go. Money made. And I'm going to let the rest of it run. That's just me. That's how I trade, mate. That's just me. Remember, we trade in the fucking news. That's just me. You do you. All right, so nice trading. Nice trade on the news. Um, no, there is no chance to get trade on the VIP, mate. I don't send news trading on the VIP. This is only for people that join my live shows. Sorry. You got a little profit with the US 500. Yep. Where's the Mo now? So, yeah, I am going to log out, being live for an hour. We already hear what we needed to hear. We already made money on this. Very possibly, we're going to see the S&P 500 continue to rally. You manage that trade as you see fit. You're welcome for the free money. So, yeah. Um, I'm done with Powell. Thank you, Mr. Powell, for the hawkish remarks and making me money. And I will see you guys tomorrow. Also, if you want to be part of the VIP group and you don't know how, well, it's very easy. I am going to teach you how. Right now, you just have to click on this link and pay me 40 pounds. And that's it. Nice trade, bud. Enjoy and good luck. All right. Thank you, Juan. Hope to see you back in the trading jungles. Cheers, guys. Goodbye.